Welcome to the Life Self-Mastery Podcast, where we bring in entrepreneurs who have created online businesses and improved their lifestyles. Here's your host, Rohit Malhotra.
Hi everyone, I'm Rohit from lifeselfmastery.com, and today we have Coran Woodmass, who is a founder of FBA and who's a private investor with e-commerce companies. Coran is originally from Brisbane, Australia, and now lives in Prague. Welcome to the show, Coran.
Thanks, Rohit. Thanks for having me on.
Awesome. So, how did we get you started in e-commerce and internet marketing?
Sure. So about 5 years ago, I left Australia, left the corporate world. I was in a digital marketing executive for a large travel company, and my wife and I left Australia. We went out to travel the world and see if we liked living abroad, and definitely liked that. So at the same time, about a month after starting traveling, being a long-time entrepreneur, we were supposed to be on holidays. It took me about 3 weeks to start looking at business models. And I actually started reading about buying and selling businesses in general, and then online businesses. And the thing that got my attention of online businesses was we were actually planning to move to the UK, and I was looking at potentially buying businesses, brick and mortar businesses in the UK at the time. And I read an article that said 2015, which was the year that we left home, was the first year that online businesses were selling at a higher multiple than offline businesses, so traditional businesses. And I thought, wait, there's something here. So I started investigating further, started investing myself, buying, building, and selling online businesses. We were doing affiliate businesses, ad-based businesses, websites, and then built and sold an e-commerce business. And once we sold that e-commerce business, we took some of those funds and actually launched an FBA business. And during that time of selling and then starting the FBA business, I had a lot of friends that actually reached out to me and said, how do you value a business? How do you prepare for sale? And then on the flip side, how do you value a business? How do you evaluate businesses? How do you buy businesses? How do you structure deals? So essentially, I was becoming a broker before I actually became a broker. And then I went full-time. I started working for another brokerage first, and then founded the FBA broker in mid-2016. So this has been the full-time focus for me for over 2 years now, and the business is growing in leaps and bounds. So that's how I got started.
Awesome. But you got your start in 2015 in e-commerce, or were you got it? And how long did it take you to start an e-commerce business and then go on to sell it?
Sure. So that one we had for about 18 months at the time before we sold it. Got
it. And there are a couple of thoughts to it. One is, you should build a business for 5 to 10 years, and then it could be a lifestyle business. So when you start an asset-based business and then you want to sell it. So should somebody sell the business, or should they keep it for a long term?
Sure. So a lot of that depends on you and what your goals are. So I often say to people there's about a 4-year window in the FBA space. In an inventory-based business, there's around a 4-year window. So I can explain how that works, and then explain why you may not want to sell, and why you might want to think about having a longer-term view on your business. So I'll explain the 4-year time frame first. So I get asked a lot, how can I build an FBA business and flip it in 6 to 9 months? And the honest truth of that is, I think a lot of that is going away. I don't think there's as many opportunities to do that in the coming 6 to 24 months. I don't see that as a viable option anymore. And there's a couple reasons for that. We can get into that later. But what I'm actually seeing with a lot of our really successful clients that are selling their businesses quickly for high multiples, what we're seeing consistently across the board is that it takes time to build up a business to be valuable, to sell on the open market. And often with that 4-year time frame, the first year is really just figuring out what works, like finding a niche, finding products that solve a real problem, getting your supply sorted out, getting designs, this type of thing. So that first year is just figuring out what works. The second year is really doubling down and investing heavily into that niche. So if you find a sports and outdoor niche that really hits for you, then figure out what those customers want. What else do they need? Go and find products for that and reinvest as much as you can into building that business. And that could take a year or two to really find that 3 to 5 to 10 products that really hit well and that you can optimize for net profit. So you want to make sure that you're making money off these products too. So often in that second, third year, you'll be culling some products. You'll be doubling down on what's working, adding to that product line. And then in the third and fourth year, you can really optimize for net profit, which is what the whole valuation of your business is based off, is the annual net profit of your business, not revenue, right? So, and net margin is simply your net profit divided by your revenue. So that number needs to be significant when you go to sell. In 2017, we tracked 174 sales for $324 million US. And we found that the average net margin of 2017 of those sold businesses was 30%. So a lot of times people are building out businesses in the FBA space, inventory space, aiming for around a 20% net margin. That's good to get you going, but you really, when you're going to sell, it matters that you have really good margins. The products are defensible. You're serving a target market, not having 100 random different products that don't serve the same customer. So that's the 4-year time frame. And really, you could actually do that longer. You could take 5-10 years to really build out a solid business and then go to sell. And one of the biggest points of valuation that will increase the multiple your business will sell for is the amount of time that you've been in business. And quite simply, this is because the longer a business has been around, the higher the chance that it'll continue to succeed as it has in the past. So it gives buyers more confidence, gives an investor confidence in buying your business over someone else's. Now, I also have a number of friends, and myself included, who aren't selling their FBA businesses. And there's a couple reasons for this. So one in particular, I can talk personally about my own situation. We actually have a supplement business that we built over the last couple of years, and we now really don't focus on it at all. My wife spends about an hour a month, if that, running that business. It's very automated, very hands-off. It's actually declining year over year. So that's not a good time to sell a business. But the real reason we're not selling this business and have no plans to is the amount we get net return to us is almost 35% cash on cash return. So cash back in our pocket is 35%. Now, it's really hard to find an investment elsewhere outside of that business that returns 35% per annum. So that's why we're keeping that business, is it's just a great investment vehicle for us. If I find down the track there's a better place to park that money and get a better return, then sure, I'll sell it and put the capital to work elsewhere. But for right now, that's our decision. And other friends of mine have been in similar situations where they've been growing a large, sizable business. Maybe they're doing 8 figures in revenue plus per annum. They've been aggressively growing the business and could sell for a decent amount. But they also think, well, if I could sell the business today for 3 to 4 times annual earnings, and I think the business could keep running for 5 to 10 years, and that cash that I'd sell for today, I don't have something else to turn around and get that return, the same return they're getting from their business. A lot of people, it's a personal decision, but some people are making the call not to sell. And in most cases, when I'm talking to people that are thinking about selling their business, it's either not the right time to sell or I wouldn't sell the business right now. So it's quite an interesting thing. It's definitely better to plan for your exit. We're working on exit planning right now with a number of clients, anywhere from 6 to 24 months in advance of actually selling their business.
Wow, and that was a lot of great information. So, you talked about 2017, $343 million worth of businesses were sold. FBA businesses are not going anywhere. There's a lot of talk about that. Amazon FBA businesses are not exactly businesses in comparison to e-commerce websites where you're driving the traffic on your own, or you have your products on Shopify and you control the distribution. So what is your take on that?
So, um, okay, it depends. So, I often have people talk to me on social media platforms like Facebook groups, and they say, how can you sell a business for an FBA business for this higher multiple? Well, the problem there is people lump an FBA business, in quotes, into the same bucket, when really there is a number of business models that would actually utilize the FBA, the fulfillment by Amazon service. So an FBA business, in quotes, could be you go down to your local store and you find some brand name products that are on sale. You buy as many of them as you can and send them into Amazon. You can use FBA for this. So in that case, it's more of a retail arbitrage, or you could do that online. That business model isn't sellable because it's not repeatable. You have to go down to the store and figure out what's selling or what's cheap, right? So that's a different business model altogether. So where I think the second type of business model is often referred to as private label. Well, actually, this is two different business models. So there's white label and private label. And white label is pretty much where you get a product and you slap your label on it or your brand. And in some cases, people don't even put branding on it. They just call their shop or their store on Amazon X brand, and they sell glasses, let's say, that they find on Alibaba, and they're a Me Too product. So this type of business model, when we first started the FBA broker, we could have sold these all day, every day. What we're seeing now is investors and buyers being more savvy and understanding the differences in these business models. Then you've got private label, where you maybe put in some effort to make the product better or different, unique, something like that in the marketplace, and you spend a lot of time on branding. So if you're building out a brand that people actually search for off of Amazon, so maybe you're in the sports niche, a vertical of the sports niche, and people that are involved in this sport know your brand, they talk about your brand, they're searching for your brand outside of Amazon. Now you have a brand that actually matters and a real business. So maybe then your products could be patented or proprietary in some way. So you add some layers of complexity, make it harder for the competition to actually compete with you. This type of business model has longevity. This type of business model has been around since the beginning of capitalism, and probably earlier than that, and will continue to be valuable down the line. So I think the Amazon sales channel should be treated as such. It's a sales channel. So if you can build a real business behind this sales channel, use the momentum of Amazon, use the tools to find what your customers want, what they need, a solution to a real problem. Start there, but don't stop there. Build out a real business, build out a brand, and that is something that you can always sell. Whether you're just selling on Amazon or you're selling off of Amazon on other platforms, your own website, however you're selling, if you're selling in person, if you have a retail store, if you're selling through wholesale, this is a real business that will always be able to be sold. So I think it's the business model that people are utilizing, that determines whether a business can be sold today and whether, if 1 year, 2 years from now, people will even buy that type of business. But that type of brand approach, where you're solving a real problem, that will always be sellable and always be valuable.
Got it. And how do you value a FBA business? Is it the multiple of the net profits you make?
Yes, correct. So what we do is we look at your trailing 12 months or last 12 months of revenue and net profit. So to find your net profit number, there's a couple ways to do this. So you can, if you're a smaller business, say doing up to 5-10 million in revenue, chances are you could use the SDE method. It stands for seller discretionary earnings. So it's not actually the net profit that you'll declare for your taxes, let's say. We can add back a lot of things. So in most cases, you can add back your personal income as the owner of the business. You can add that back into the bottom line. You can add back your corporate taxes, any non-essential business expenses. So if you're traveling to conferences, you can add that back. Things like that. If you're renting a car, if you have an office that's not actually needed for the business, you can add that back. So that actually builds to a higher bottom line, and that's called the SDE method. And if you're a larger business, so 10, 20 million plus in revenue, chances are we'll be using EBITDA, which is earnings before interest, tax, depreciation, and amortization, to sell your business. So that EBITDA number, also you can add back sometimes your salary into that number to create the EBITDA number. We use that as the basis, the trailing 12 months EBITDA or SDE, and then we come up with a multiple for what your business could sell for, and we go to market. So the reason that multiple will change is based on the type of business you have. But that's actually what we use is the trailing 12 months net profit.
Got it. So that means, I don't rate, if I start a business for say 12 months, and if I want to exit out in another year or so, you're going to look at the last 12 months balance sheet, or how much profit that I've made in the last 12 months to evaluate what should be the multiple, and does the multiple work on different categories like health, sports, beauty, kitchen? These are the popular categories on Amazon.
Absolutely. So yes, category does play into the mix, but the most important thing is what we're seeing is brand. Brand matters most first. So as I described before, if you're in that position, chances are your business could sell for a higher multiple. Age of the business comes into play, what your net margin is. So dividing that SDE number by your revenue to come up with that net margin. Are you plus or minus 30%? So if you're 20% and the average selling margin is 30%, you're behind the 8 ball. Right. And then it also comes into product mix. So the size of the business matters when it comes to multiple, also product mix, income diversification. So a lot of the smaller businesses in that 1 to 2 to 3 year range, we'll see that 1 or 2 products are really carrying the bulk of the revenue for the business. That's a product risk. So if one product has excessive competition, one product has an issue on Amazon, one listing goes down, then the business basically stops, the revenue stops. So that's a scary proposition. If you have a wide range of products, no one product is more than say 20 or 30% of the actual revenue of the business, you're in a much better position. There's diversification there. Also, income channels come into play at the same level. We have a 30% rule. So Amazon being most cases is the bulk of the income. If you have your own sales channel, so your own website, another marketplace you're selling on, if that's more than 30% of the actual revenue, that will increase the potential sell price of your business. It'll increase the valuation, but also increase the amount someone will actually pay for your business. So a list price is not what you will sell your business for. So we could talk a little bit about that later too, if you like.
Sure. I'll definitely like to, talk more about it. But, I'm also interested to know who are these buyers, who buying these businesses? Are they private equity investors, or are they, high earning executives?
Sure. So that's a great question. And it depends on the list price or the enterprise value of the business when we go to sell it. Right now, our registered buyers have almost 800 million US in cash capital ready to deploy for FBA businesses. So there is a lot of money in the marketplace, but it really depends on the size of the business. So we tracked, like I mentioned, we track every month. We've been doing this for 2 years. We track, or now weekly even, the movements in the market. So any public FBA business for sale, we've tracked it. We've watched how long it's been on for sale, how long it takes to sell, and what multiple it actually sells for. So we've been tracking the whole market. So I can tell you that around 60% of the sales that are actually happening are in that 100 to 500,000 price point. And in this price point, that's list price, mind you. So that's the price the business is listed to sell for. And in this price point, you'll see a lot of private investors. So they are these high-paid executives that have some extra cash. Maybe they've sold a brick-and-mortar business. We had a guy sell a restaurant, and he took the money and went in online business because he wanted freedom of where he could live and run his business from, right? So he didn't want to have the brick-and-mortar business anymore. That's quite popular. So these guys they're looking to do maybe 1 or 2 transactions. They maybe have $500,000 in cash, so they're often afraid of loss. They have a huge fear of loss because this is their hard-earned capital that they've built up over time. So they're really looking, and they're sport for choice right now. At this present moment, there's over 220 listings, and at least 100 of those are in that under 500,000 range. So there's 100 listings potentially. So if you're at that price point and your business isn't selling, this is probably why. If you're at that price point, I would hesitate putting it on the market right now. It's definitely a buyer's market, and the offers are coming in well lower than they were just 3 months ago. So the marketplace is changing very quickly. In the 500,000 to $1 million list price range, you'll see less private buyers because they have less of that capital to put in. Few of them have $1 million to put into one deal. And if they do, they're going to be very cautious about which business they buy. And it's also not big enough for private equity groups to really get excited about unless it's an add-on. So maybe they've got a huge sports and outdoor business and they're looking to roll in a few smaller sports brands, potentially, but we don't see a lot of that just yet. So there's less buyers in that $500,000 to $1 million range. And then above the $1 million range, 1 to 5 million, we have a ton of private equity cash buyers right now. So if your business is a solid brand, has good margins, and you're in that million to 5 million range, it's a really good time to be on the market. There's a lot of cash buyers competing for deals. We had a listing at 1.5 million recently. It was in the home and kitchen category, which incidentally was the highest amount of transactions last year in 2017 was in the home and kitchen category. So this is a very interesting category for buyers. We had 9 interested buyers on that one and 2 of them competing on cash offers. The business was on sale for about 3 weeks.
Awesome.
And it sold, and the seller was actually 23. So now he's a millionaire at 23. He'd run the business for 4 years. So that's not a bad return on investment.
Absolutely. And, just wondering, do you also offer financing? Because, a lot of people don't, when they think about entrepreneurship, they think more about, building from scratch, buying businesses, buying assets is going to help an individual, who's got a couple of years of savings. So do you also help in financing, or do you give that option, or is it just a all-out cash buyout?
Sure. So most of the deals we're seeing close right now are cash purchases, and a lot of it is actually cash at close. I do a presentation where I talk about the deals that we've closed and also the deals in the wider market. And right now we're seeing around 80 to 90% cash at close in all of those deals, which is amazing. So you need a lot of cash you need access to cash to basically buy these businesses. There is one version of financing that is available. Unfortunately, it's only available to US-based buyers and sellers, and they have to be both US-based. So the entity that's being sold needs to be a US entity that's paid taxes for the last couple of years in the US, and also the buyer needs to be a US citizen and able to and have good credit, basically. The type of financing there is backed by the SBA, which is a small business administration. And we're seeing a lot of deals being done where the SBA can be used, SBA financing, that will get the deal done. However, what we are seeing, especially in that 1 to 5 million range, so the SBA is really for an acquisition in the 500,000 to 5 million category in that range. However, right now we're seeing, like I mentioned, that 1 to 5 million range is really cash buyers. So cash is king. There are some alternative financing options, but they're quite expensive. So they're not very common. What we're seeing right now is maybe one operator that has experience with Amazon getting some financial partners together to go and buy these businesses. The one thing to think about, if that's what you're looking to do, is to, you need to prove funds with brokers and other sellers when you go to buy. So just saying, I've got some friends that we're going to go pool some money together may not be enough. You'll need to, especially in the 1 to 5 million range, you're going to need to show funds, right? So yeah, keep that in mind.
Got it. And what is the average multiple that you see? Is it 2-3 times of the net profit?
Sure. So again, this depends on the price point. So I'm just scrolling down. We did a post last year on this. Okay. So I'll give you, for 2017, I'll give you the average list prices by list price, the average multiple by list price. We've actually broken this down a little bit further as well. So list price range, whether it's, so the things that we've looked at, you can read this at our website, thefbabroker.com, and there's a 2017 business sales tab. You can read this article. So I'll go on the Amazon only, because that's the bulk of the market is Amazon only. In the under 100,000 right now in 2017 was 1.9 times free cash flow. 100 to 500 was 2.5. 500 to a million was 3. 1 million to 2 million was 3.1, 2 to 5 million was 3.9, and above 5 million was actually 3.8, so a little bit softer. Things to keep in mind at that price point, at those price points, above $500,000, a lot of different brokers will actually bundle in inventory for that. So it's not a true multiple just on cash flow, it's also including some inventory. So anywhere from that 2 to 3 times multiple is what we're seeing. However, this year for 2018, we're actually seeing a steady decline in multiples, and predominantly at that under $500,000 range, simply because there's so many deals on the market. Deals that are getting done are actually a lot lower than that. So those numbers are a little on the high side if we were to go and evaluate a business today.
Got it. And I want to know about FBA brokers. How big is the team, and what are the kind of revenue numbers you do, and how do you make money out of it?
Sure. So first question was our team size. So our team is actually growing right now. We're aggressively recruiting as we speak. We have a team of 5 right now. I'm still the lead broker here, but we have a team of 5. As far as how many deals we're doing, we're exclusively in the FBA space. So in 2018, we've done just over 3 million in closed transactions. We have another, about another 5 million in vetting and listed, and our goal for the year is at least 10 million in closed deals. And I think that's highly likely. We have a deal coming to market that will probably be listing for around 8 million this year. So that's where we're at year to date, which is nice. We're growing very, very quickly. We get paid exclusively at the moment, on 2 things. So the business actually closing and also exit planning. So sometimes we'll do exit planning for free. Sometimes it will be a staged program and a consulting approach. So it depends on the business, what makes more sense. We always do the intro call for free for the most part. So that's how we get paid. We get paid on results, basically, success-based fees.
Awesome. And, I want to bring up our FBA business price guide, so it's a guide that you have where people can get to know about what price they can sell the businesses. So you want to talk more about it?
Yes. So we have a resource called FBA Business Price Guide, and that's just at fbabusinesspriceguide.com. And you can sign up for that and see the latest report. We put that out each month. And in that report, we talk about what sold, at what multiple, how many listings are on the market at different price points. And what we're seeing is driving prices higher or lower. And also because about a year ago, we found so many deals being new listed to the market and also closing that we started doing a Market Watch Monday email. So you'll also get this if you select yes on your opt-in. You'll actually get the Market Watch Monday email as well. And what we do in that email, we break down what sold in the past week and what was interesting about what sold. Then we look at how many new listings have come to the market. Interestingly, for the last 3 weeks running, there's been about 13 new listings each and every week, which is weird. But we're looking at about 10 to 20 a week coming to the market right now. So at the end of that email, the best part of this is we link to every new listing, regardless of who's listed it. So not just their own listings, the entire market. So if you're looking to sell an FBA business in the future, you may want to just have a look at these, see what's interesting on these, and then read that email and see what's selling and why. And if you're looking to buy an FBA business, this is a gold mine. Back when I was investing, looking for deals, I found it really hard to find deals. So about a year ago, we started putting this into each and every email so you can go and find what deals are actually available in the marketplace. And it takes a ton of time for our team to find all these deals and put them together. So it's a really good resource that's totally free. So yeah, that's a good thing to check out.
Awesome. Yeah. I mean, a lot of people who want to buy such businesses can do the research, and when they're ready to buy, they know how to evaluate and what businesses are right for their lifestyles. So
exactly.
Yeah. So let's quickly do the top three. What's your favorite business book?
Oh, this is a good question. Do I have to make just one, or can I give a couple?
Yeah, you can name as many.
Okay, great. So my favorite business story is actually an autobiography by Phil Knight. It's called Shoe Dog. And this is the co-founder of Nike. And what I liked about this book was I was expecting to read a book from a billionaire with a massive brand about how great it is being a billionaire. But what actually came through in the book was how much they struggled in the early days with an inventory-based business to get it off the ground, to get funding. Their bank was literally saying to them, look, we can't lend you any more money. You're growing too fast. That is insane. And think about where they'd be now if they just stifled their growth because one banker said, we're not going to lend you money. So the whole story of how they got started, how they grew this immense brand, and just some luck that they had along the way and how to capitalize on that was a really great book. So that book was an amazing business read. It's hard to put down. I listened to it on Audible. So be prepared. You'll be listening to this if you go out for coffee. If you'll find yourself putting it on in between things. That's when you know it's a good book. Another book similar to that is The Snowball. And this is about Warren Buffett. He won't actually write an autobiography, but he commissioned a finance writer to put together a book that's somewhat of an autobiography. So that's another book that's a really interesting read. I learned a lot about how he thinks, and also the difference between a public persona, what people talk about with someone super famous, super successful like that, and what actually is the case. He actually told the writer, if you get two conflicting scenarios or stories about a situation, go with the least flattering. So that gave me some confidence that the book is going to be somewhat interesting. That's a great book to read. The third is another autobiography called Total Recall by Arnold Schwarzenegger. This was a really good book for business and finance, more than I thought I was expecting. So he was actually a multi-billionaire before getting into movies. And he talks about how he got started in Austria in bodybuilding and then did all these businesses on the side, invested his money, and then was actually quite rich before becoming an actor. So that was a great book too.
Awesome. All three are great books. I'll put those in the show notes. If you could go back in time when you started the FBA business and FBA broker, what is the one thing you would have focused on?
I got some really good advice from a friend who was also in the FBA service space at the time, and he's since sold his business. And he's the one who told me I wanted to go and become a broker, basically. And I was saying, look, it's really hard to get cut through. There's a lot of brokerages that have been around a long time. He said, focus on the FBA space. And at the time, I wasn't sure if that was a big enough market. So if I was to go back again, I'd do the same thing again. I would listen to my good friend, listen to some good advice, and that gut feeling I had of, I don't know if this is the right idea, I don't know if the market's big enough, was actually the sign to go forward. So I think trusting that gut instinct is really important when you're launching something. And also following a trend. Like if you see a trend coming, if you know there's a trend coming, I saw a trend coming because I was speaking to buyers and we were closing deals in the FBA space at the former brokerage I worked for. The first deal I sold in 4 days. It was a friend of mine. We listed his business. The buyer came in 4 days. We closed the deal. And the buyer literally said to me, any FBA business you list, we will buy. And we started getting so many inquiries. There was strong demand on the buy side. And it was only because I was in that position talking to hundreds and hundreds of people that I could see that before the general market could see the trend. So back yourself when there's a trend, definitely ride the wave, right? And just get to work.
Got it. And what's your favorite online tool, for example, Gmail or Slack or Lead Pages?
Sure. The biggest difference in our business is actually Help Scout. I was running everything from my email, just using regular Gmail for years. And Help Scout, now that we have a team, we can all sort of help out. So that's been the biggest game changer for me. We use a lot of different tools, but that's the only one I'd say is really worth mentioning.
Got it. And, what is the best way people can reach out to you and know more about FBA Broker?
Sure. So yeah, the best way to reach out is thefbabroker.com. So if you go there, you can read all about us. Definitely sign up for the FBA Business Price Guide if that's interesting to you. And if you'd like to reach out directly, we do have a full team now, like I mentioned. So email us at sales@thefbabroker.com, and one of us will get back to you or get routed to me, and I'll get back to you personally. So yeah, we love helping people at all stages of the sales cycle. Even if some people just starting out are often reaching out with a question or two, we can help you there too. And yeah, happy to talk more about this topic. I love this space. I could talk about it all day, and I do. So I have the best job in the world.
Awesome. Coran, I learned a lot of things from you, and thanks for coming on to the show. I really appreciate it.
Cool. No worries, Rohit. Well, thanks for having me on the show, and yeah, let me know if I can help out in any other way.
All right. Thank you.
Thanks for listening to the Life Self-Mastery podcast, where we teach you how to start and grow your online business. For more information, visit Rohit's blog at www.lifeselfmastery.com.